So wait, this month I had a question. I don't know what happened, but I had questioned myself. If there is basics in mathematics, such as board mass, brackets of division, multiplication, addition, subtraction, and people still utilize that to make money, why aren't we having basics of trading? Like something universal to which I can hop in without any difficulty and study that, then start becoming consistency plus profitable. Because wait, this month I just utilized division, multiplication, addition, subtraction, but still got paid to some stuffs. And that's how the world works. Few utilize algebras and algorithms for figures and so forth. But why in trading we have different terms? Like, for example, for I to become profitable, I need to go through indicators. Some need to go through ICT, others need to go through trend lines. They are the ones support and resistance, other people VSA, volume spread analysis. Come on, what are the basics of trading? So through that, I had to do a deep research into that and extract meaningful and simplified version to my answer. And that's where everything led to me into this. So I was testing this out, and this was a little execution. I shared it on my trading community. This little execution just gave me a ratio of 1 to 2. That was my moment. So that means through that, I'm able to teach someone who needs to understand Forex trading, not only Forex trading, to understand trading and become profitable. But does he need years to become profitable? I don't think so, but let's dive in, man. Let's dive in. So we are building nothing from something. Is it something from nothing? Both ways. So let's get started. How did I land up onto that aha moment? So this is low, actually, no editing. And what I had done, I'll show you the process. Let's get started then. Beautiful. So first and foremost, I just asked ChatGPT, what's Forex, right? And this is low. That means real time. What's Forex? And ChatGPT had gave its answers, right? So online forex market traders buy and sell currencies like USD, Euro, GBP, JPY. Okay, so this means buying and selling currencies. So the difference between those is where people earn money. That would be great. Okay, so he gave an example. If you think the euro will get stronger compared to the US dollar, you might buy EU, Euro USD. If you like and the euro does rise, you can sell it later for profit. Isn't that interesting? So you go into key features. You see market is open 24 hours, 5 days a week. You'll be like, okay, those are working hours. That's good. Most traded markets in the world, 6 trillion a day. What if you just get $500 off the market every day? Let's say not every day, just per week. In a month, you will have around 2K. Isn't that enough? If you need more, then you know what to do. Leverage. So yeah, the other thing is traders try to profit from small changes in exchange rates. So after reading through this, you get the mind of Forex. And you come into common reasons people trade Forex: to make money, hedge risks, and international transaction and conversion. So starting from there, you'd ask, how do I start trading Forex? As it says, great question. First, you need to learn the basics. What you're trading, currency, like how you profit, you make money when the value one changes relative to another, okay? Leverage and risk, so you can trade more than you deposit. but this also increases risk. You'll be like, okay, so if I put $10, I can trade $100 and still make profit off of that, but also I can still lose off of that. Okay, so tip: learn terms like pips, loss, leverage, margin, spread, stop loss. Learning those learning those terms doesn't guarantee you becoming profit. Like, because we have a lot of traders know these terms and still are forex traders, marketers, and some are gurus. Beautiful. So second is choosing a broker. Nice. The regulated one, user-friendly platform, low fees or spreads, demo accounts to practice. So everything is basics, but still people ignore this. You'll be like, why do people ignore the basics of trading? That's weird, right? Because right now I can tell you millions of people are trading off of unregulated brokers. Is it their problem? I don't know. Is it the industry's problem? I don't think so. But I guess it's the gurus and the marketers' problem. Great. So it gives examples of those brokers: IC Market, XNES, Pepperstone, XM, FTM. You choose your brokers. I chose XNES. That's for me. Then you need to open demo account to practice first. So you get used with trading platforms, test strategies without risking lean money, build confidence. Most brokers offer demo accounts. So that's the third step. Just open that account. And the fourth step is choose a trading strategy. As you can tell from ChatGPT, it says choosing a trading strategy. It hasn't listed the ones we know, like VSA, support and resistance, and so forth. It just says decide how you want to trade. Day trading, buy and sell within the same day. Swing trading, hold position for days. Scrapping, make quick trades for small profits. News trading, trade based on economic news. You choose your poison, like here. So like here is where every trader diverge to their own interests, like choosing their poison. But all of this is the same, right? Apart from choosing the brokers, I'm just saying that here is where much of us deviate. So it says learn how to use tools like technical analysis, charts, patterns, and fundamental analysis, economic news. Here is the meat. Here is where people become profitable or become non-profitable, and consistency, right there. Opening a live account, everybody can open live account and deposit money. Keep learning and improving, because Forex is a skill. So successful traders keep studying and adjusting their strategies. A strategy that you own, not a strategy that you learn from someone else and trying to redo the same. That means if you take a strategy from another person and try to redo it, means you're replicating that. But if you take a strategy from another person and execute it as your own, then start learning from it and improving according to your own terms, that means that's your strategy. That's it. Yeah. They say a great artist still. So resources, YouTube tutorials, you are dead. Websites like Pep Tips, a little bit not dead. Telegram and Discord communities, you are dead. So final tips: don't trade money you can't afford to lose. But people gamble into this. Don't trade money ready to lose. Control your emotions. Okay, that's great. Avoid get rich quick forex scams or signal sellers promising guaranteed profit. Come on, guys. How do I start trading? They just give you this tip. It's not about AI. It's not about AI giving you the basics, but also if you go to different sites, they give you these same things. But people ignore the basics, just want to get money into their bank accounts. As you can tell, final tips: don't trade money you can't lose. On my end right now, I'm able to lose $1, but losing $100, I'm not ready to do that. Control your emotions. Greedy and fear are dangerous in trading. Okay, Today I'm going to make like $20, and you can see price is just doing some type of shit that you like, and you want to increase your average and want to make $100 or $200. Bro, that's greedy. You are dead. Fear. Fear of executing. You see your strategy is playing out, and you'll be like, okay, man, should I execute it, or uh then you miss the opportunity, then you're not trading, then you'll be stuck on that loop. Also, get rich quick scheme. You see these gurus out there just flexing these Lamborghinis, Ferraris, and so forth, and you'll be like, man, I want to be like them. Hey, if you want to be like them, learn the basics of Forex, create a course, and you are done. Start selling that course. That's it. There is where you keep flexing. Why do you need to flex? You need to flex in order to make people believe you make money. Then after buy your course. After buying your course, you go learn the same shit, and the process and the loop keeps moving. That's great. And that's okay if you wanna get rich quick. That's it. So after asking that question, I'll be like, okay, that's great info. How can I become profitable from Forex? Any tips? Easy peasy. Cause after listening to blah blah blah, but I need to become profitable. Cause why am I learning Forex? I just want to be profitable, right? Adi says, great question. Becoming profitable in Forex is totally possible, but it takes discipline, patience, and smart decision making. First, what does discipline mean? Discipline means sticking to your plan. Patience means waiting for your plan to play out. And smart decision means that you make decision according to your experience. You make decision according to your subjectivity. Because discipline patience is all about objectivity. Objectivity means sticking to what you are, to sticking to that trading plan. And smart decision, it depends on your subjectivity due to having experience. Easy peasy. So first it says master risk management first. This is the very same thing people are ignoring, but it's the very thing people needs to understand as the basics of Forex. We are not even in any trading plan, trading strategy, and so forth. But man, this is a lot. Master risk management, risk only 1 to 2% of your account per trade, but people keep gambling. Risk like it's a fortune. I don't know, man. And always use stop loss. I can tell you right now, even these big gurus don't use stop loss sometimes. Don't guess. Set a line where you're willing to exit if you're long. That's it, man. So you'll be like, okay, my trading plan should have risk management 1 to 2. Just risking that. I need to use a stop loss. Beautiful. Use position sizing to control how much you're risking. Okay, that's beautiful. Don't chase losses. Take the loss and move on. Bro, people will wait. People will try to chase the loss, meaning that they will take the same entry on the same ideology that had failed. Damn. This is the very basic knowledge needed for a Forex trader. But people ignoring that. They need something. They need the Holy Grail. This is the Holy Grail of trading. As it says, protecting your money is more important than making your money. Damn. What do you need? You need to preserve capital in order to be in the market. You need to protect your money in. That's it, man. You enter into the market, protect your money, making money comes next. People ignoring that. Step 2, stick to one strategy and master it. What? I need to stick onto one strategy and master it. But people today will learn VSA, tomorrow we learn ICT, tomorrow we learn, bro, Stick to one strategy and master it. Remember, not only sticking to one strategy, you need to master it, knowing the ins and outs of it, knowing the cons and pros of it, knowing its limitation. What do you need? Damn, these are beautiful nuggets. Don't jump between strategies. Example of beginner strategies: support and resistance, breakouts trading, moving average crossover, price action patterns, pin bar, blah blah blah. Remember, they say back test it, try it on the demo account, only go live when you are confident. God. I know there are some professionals say don't back test it, but how will you know that your trading plan has an edge? Quite weird, huh? So it says try on demo account. I guess after back testing it, you need to go into demo account. Why demo account? You will feel that, you'll feel the pain, you'll feel the you'll have some emotions into it, but going live, man, there is where the little coaster is. But when you are confident, here's the thing people tend like now. People stick into this loop, backtest, try on demo, backtest, try on demo, trying to figure out the perfect strategy. That means when you're backtesting it, you're trying on demo, you're sticking to one strategy. That's great. But you're mastering it in an environment which won't give you money. Oh my God. That's insane, man. So when you backtest it, just become profitable in 1 month. To me, go into demo account, try it on the next month. Then go onto live. Just go live, man. If you made it in 1 month, you demo it and found that this win rate is around 30 to 40, go live. There is where you learn. Here on backtest and demo, I don't know, you won't learn something. You will learn, but you won't learn the little markets. And the third most difficult thing people ignore and won't do, keeping a trading journal. You can't master a trading strategy without keeping your trading journal. Write down why you took it, entry and exit points, outcome, profit or loss, what you have learned. What you have done, what you have learned, then is where I master my trading strategy. That's beautiful. This helps you to spot bad habits and improve over time. Beautiful. Control your emotions. That means controlling your bad habits. This is key. Many traders lose money because of greedy. What does greedy has? Over trading, no stop loss. Beautiful. Fear, closing good trades too early. Revenge, trying to win back a loss. Stick to your plan, not your emotions. Hey, stick to your plan, not your emotions. Nobody will tell you this. Trust me, nobody will tell you this. The other thing is be patient and focus on consistency. Wow, bro. This conversation is a $1 million conversation. But I don't have that money. Me too, I'm still learning right here. Dang, bro, that's crazy. Okay. Be patient and focus on consistency. Forget quick money. Aim to grow slowly. What? 5%, 10% a month is great. Damn. Bro, through this I can build my trading plan. It's just the basics knowledge. Just the basic of trading I'm learning right here. 1 to 2% risk. I want to risk 1 to 2%. I want to grow slowly 5% a month. I want to be consistent. I want to let small wins stack up. Damn, this is nuggets being dropped here. So it says compound is powerful. Small profits grow big over time. Bro, stick to your plan, not your emotions. Compounding is powerful. Small profits grow big over time. people ignore that. They just want to execute that Lamborghini trade. You know what I'm saying? One trade can buy you a Lamborghini. 6, keep learning, but avoid overloading. I like this. Keep learning, but avoid overloading. Stay sharp, but don't overwhelm yourself. Good resources, Baby Peep School, that's nice. Best free learning, YouTube channels, Raina Tail, no nonsense forex. Okay. Here is where people get confused. YouTube channels where they can learn. I have no suggestions. Practice on demo, analyze every trade. Bro, this is the basics of just forex market. Dang, that's crazy. And avoid these common mistakes. I don't know, I'm still learning from this, right? Trading without a stop loss, use high leverage recklessly, over trading too many trades, risking too much to make back losses, trusting random signal sellers or account managers, scams. Damn, that's crazy. So summary, how to be a profitable trader, because that's what brought me here. I just want to be a profitable trader, you know what I'm saying? So step 1, learn. Step 2, plan. Step 3, practice. Step 4, discipline. Step 5, improve. Step 6, stay humble. Bro, what else do you need to become a profitable trader? First, learn. Understand how forex works. That's what I'm doing right now. Second, plan. Use a strategy plus risk management. He didn't say only strategy. It adds risk management. Third, just practice, man. Start with a demo account. Okay, demo account, beautiful. Fourth, discipline. Control emotions. Follow your plan. Once you have created a plan, then trade your plan. Not trading it through your emotions. Fifth, improve. Journal plus reflect plus adjust. Here's where people ignore this section. They don't want to improve. They just want to stick on that trading plan, the same trading plan, which shows losses, right? A lot of losses like there. Not losses. Is it called losses? Yeah. They just don't want to improve. They just don't want to journal because it's difficult. They can't reflect and also they can't adjust. Third, stay humble. That means always learning, but not overloading. You know what I'm saying? So I'm learning the basics right here, which are quite nice, and this is the foundation of forex. But people just ignore this. That's weird, man. And people are just paying a lot of millions. Is it million? Paying a lot of bucks just to learn this simple knowledge from someone who said that he has made millions. Damn. Why is free? Okay, let me know if you want a simple starter strategy. Whoa. That's what we are talking about. Help analyzing your trades, a Google Sheet template for a trading journal. I'm here to help you grow step by step. Thank you, man. So let's say I want a simple starter strategy. That's what I want because I want to make money. So it says, perfect. Here's a simple but powerful forex trading strategy. The ideal for beginners. It's based on trend price plus price action. This strategy works based on 1 hour time frame or 4 hour time frame charts and uses no indicators. Damn, ChatGPT. Damn, that's crazy. Just screenshots and basic market structure. Okay, and what's that? It's called break and retest. Goal: catch trends by entering after a breakout on the retest of support and resistance. See, right now it's using support and resistance. Because as we know, it had said a lot of strategies are here. Choose your trading strategy: day trading, swing trade, scalping. But if you go down, you find stick to one strategy and master it. It says support and resistance, breakout trading, moving averages, crossovers, so forth. there are ICTs and so forth. And now I just asked a simple starter strategy. It says support, break, and retest. What you need, a clean chart, basic understanding of support and resistance, basic understanding of that. If you understand that, then that's it. Patience to wait for confirmation. Okay? 1 hour or 4 hour time frame, good balance between speed and reliability. Okay. Mark support and resistance levels. That means you need to learn fast support and resistance, right? Support to a price has bounced up in the past, resistance to a price has bounced down. Use a horizontal line to draw them. Okay? Wait for the breakout, price breaks above resistance, bullish breakout, price breaks below the support, bearish breakout. Don't enter the trade yet. Breakouts can be fake outs. Whoo! That's green, man. Wait for retest. After the breakout, wait for price to come back and touch the broken level. You should now respect the level. All resistance equals to new support or vice versa. This confirms that the breakout is real. Remember, use horizontal lines. This confirms that the breakout is real. Enter on confirmation. Once price retests and shows signals of holding, bullish candle, support, enter the trade. Buy if you broke, sell if you broke down. Stop loss, press stop loss, retest candle, aim for to your risk. Example, if your risk 20, blah, blah, blah. Example in words. You low, blah, blah, blah. Price come back and touches that point again. Don't fall for it. Don't fall below. Doesn't fall below. You enter, buy, trade after bullish candle form. Stop loss below that, take profit there. Bonus tip. Use this strategy only when the market is trending, not ranging. Be patient. The retest doesn't always happen quickly. Combine with the basic candle patterns like bullish, engulfing, blah, blah, blah. Want a visual example? I can create a chart image or walk you through one. Just let me know what pair you want, EU, and what time frame you're looking at. Also, if you like, I can give you a checklist template to follow for every trade you take. Let me know how would you like to continue. Damn! This is someone's trading plan or trading strategy and is making money off of this. Trust me. Why? Because one has like where is it? One has stick to one strategy and master it. How did he master it? He just keep learning, avoiding overloading. That means he could have been learning trend lines. He could take time learning ICT, just combining those 3, 4, 5 trading strategies and trying to get that perfect 100% win rate. But damn, he just said, hell no. I want to trade support and resistance and breakout. That's it. Damn. So let me tell him, like, I need a visual example. Trust me, we are doing like we have started. This is building something out of nothing. That's what we are doing right here. We have already have our trading strategy. What I'm waiting now is a visual example of that trading strategy. But if I understood this trading strategy correct, something close to this. Get rid of that. I will draw my support. Is that support? Okay, I need to learn those first. So this is support. This is resistance. So I need to see price ranging within like here. Right? And I just want to see price breakout like there. Beautiful. Then retest. Then goes up. If I understood it correct, then I take my entry off of that breakout. Then stop loss right there. Then 1 to 2. And this is support and resistance plus breakout trading strategy. And people are making money out of this. Is it possible? Hell yeah, that's possible, man. And this ends up on selecting only a single strategy and trying to master that. Beautiful. So on my end, after learning all these stuffs, the basics, right? As oh wow, damn man, this whoa, whoa. I didn't expect this. This is crazy. This is crazy. Let me check this. So if you look closely, can I need to open this image? Come on. Ah, I can't download that. Okay, let me just open this image. Zoom it. Breakout and retest forex trading strategy visual. So this is the resistance, then price goes up. That's the breakout. Then price come and retest the resistance line. That's where we take our entry, stop loss below. Beautiful stop loss around this price right there, and take profit right there. Damn, this gives like entry, oh, around 4 to 5. This to reward, but I would just want to 2. I'll get it some point right there. Man, this is crazy. This is crazy. This is crazy. That's crazy. So here's a visual example of break and retest forex strategy. Red dashed line, blah, 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 orange areas, breakout zone, green area, retest zone, entry, stop loss just below, take profit, This is a clean high probability setup many pros use. Damn. Say, damn. This is a clean high probability setup many pros use. Let me know if you want me to generate one for a bearish setup or help you spot one in a little market. Let me just say spot one in a little market. I know we are depending on ChatGPT, right? We're depending on this AI stuff, but this saves me a lot of time just to go through a lot of websites just learning these basics, right? To which I can go onto a single ChatGPT and get all the information from all the sites, right? Not all actually, the sites to which the machine has been trained to. As I say, this is let's build something out of nothing. That's what I'm doing right here. And here are the images, okay? Key level, breakout, pullback, enter, trade. Damn, this was a lot. This to me is quite messy. So stop loss, damn, nah, I'm not ready to enter. What about this? So that's resistance, price just went high, broke that and he's trying to retest, then whew, beautiful, but looks like a cup and handle. I don't know. And next, wow. ChatGPT just told us this strategy. And you can see people, damn man. So the broken resistance then turns into support right here. We broke that resistance and it just turned into support. That's right, retest there. The price is testing the level, but the breakout attempt phase, buying is recommended. You buy off of that, stop loss below that. I don't know where to buy though. For sure, I don't know where to buy for me. Pressing a buy, I'll put the stop loss below, then boom. Breakout and retest. Wow. Boom. Retest. Damn. Bro, what do you need? Previous resistance, strong breakout of resistance, continuation, retest, enter off of retest. Breakout, retest. Damn, bro, you'll be like, man, this works. For sure, this works. Should we give it a try? Yeah, we can give a try, but I just want to show you the thought process if you want to I know some of us are traders like there, but if you want just to start out afresh and view the market in another perspective from what you have right now, because the best thing is perspective instead of perception. Because right now a lot of us people believe in perception, believes in what you have, but ignores the other people's perspective, right? So just move off of your perspective, and get yourself into perspective. That's the goal right here. That's what I had in my mind. What if? So this is a breakout and retest right there. Beautiful. So how can I enter off of this? Damn, that's crazy. Same, daily, boom, breakout, retest, boom, done. First breakout from horizontal channel, first breakout, we didn't break out, da 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 da. Oh, we test that, we broke out, successful breakout. Now retest. Is do you take an entry off of that? No, you don't take. Your strategy says breakout under retest. Bro, this is a lot. These are a lot. Fake out, breakout, breakout, fake out, breakout, retest. Damn. So, three important terms in technical analysis: fake out, breakout, retest. Damn, that's crazy. That's crazy. I like this. Which one? You're asking me which one. Me too, I don't know which one. So, bye. So far, you can tell this shit works. Where are you? Where are you? We can tell this thing works. And this, as absolutely, let's examine a real world example of breakout and retest, blah, blah, blah. This pattern is staple in Forex trading, offering clear entry and exit points based on price action. This is crazy, bro. For a visual representation of this strategy, you can refer to the chart provided in this trading view example. Let me check that. I don't like this, trust me. So I'll ignore that. But so far, so good. We started from the basics. Like, what's Forex? That's the question. How do I start trading Forex? So, what, how, and another how. How can I become profitable? And I want a simple starter strategy, like what, how. And the other question is why. The other question is why trading Forex is to make money. That I would answer myself. That's why I'm learning that Forex thing. So that's crazy and that's great. Okay, it gave me that strategy. But on my end, as far as I have this knowledge of Forex and so forth, I was asking myself, like, what drives Forex? How come people trade? And if people trade, how do they trade? Like, if people trade, how do they trade? Like, I would start. So let me ask that question. The goal of learning Forex is to make money, right? So how do people trade Forex? Like, how Forex came about, like how it started. Like, I want to know the behinds of Forex in simple terms, like day to day. Why have I asked this question? Like, okay, this is Forex is profitable and so forth and so forth and so forth. But the real question is, I want to understand this business. How come is Forex like there? Like a good question is, why am I a human being? Yes, I know I'm a human being. I walk and so forth and stuff like that. Yeah, that's quite a vague question, but trust me, behind the scenes, give something. This makes you understand the industry more. So great question. Let's break it down simply so you really get the behind the scenes of Forex and how people actually trade in day to day. What's Forex? Foreign exchange, okay? It's where people, banks, company traders exchange currencies. Okay, so nice. For example, you just exposed you just exposed my country. Damn. So you change your Tanzanian shillings to US dollars to buy something online. Correct. I always do that. A business in Europe converts euros to pay for goods from US. That's great. A tourist changes money when they travel. So this happens globally 24/5 days. It's the largest market in the world, moving over 6 trillion per day. Crazy. A lot of money right there. So how did Forex start? Before Forex, countries used gold or silver to trade. Okay. Okay, I'm learning something. So before Forex, people usually used those items to trade. Damn, that's crazy. Then came paper money, and countries set exchange rates. So paper money, exchange rates. How comes? So that means paper money was for different countries, and if I want to exchange that, I need to exchange from one country's money to another. I need to go into an exchange, and I see exchange rates. That's reasonable. So in 1971, fixed exchange rates were dropped. Okay, currency started floating in value. Damn, I didn't know this, man. This is crazy. So 1971, fixed exchange rates were dropped. Currency started floating in value. That's great. That's when Forex trading became a real-time global market. Hoy. This all happened in 1971 when Forex trade became a real-time global market. Okay, that's great. How people trade Forex today? Let's look at two types of traders. Big players, they trade millions or billions every day. These are banks, corporations, and governments. I like this. Examples: a bank changes euros to yen for an international payment. A central bank buys its own currency to make it stronger. A company hedges or protects against currency changes. Bro, these are real world scenarios right here. These are called institutional traders. Holy shit. Holy shit. Holy shit. Remember the question I asked? How do people trade Forex? Like how Forex came about? I want to know the behinds of Forex in simple terms, like day to day. Just a simple question gets me into institutional traders. Banks, corporations, government trade millions or billions every day. Who am I to trade $10 and move the market? That's crazy. That's why they're called big prayers right there. I like that. Oh, so literal traders like here, you and me. Yes, you ChatGPT and me, you listener and me. That's wow. People like us use phones, correct? Laptops, correct? And apps to trade small amounts, correct? We trade on platforms like MetaTrader 4, TradingView, or CTrader. Okay, that's good. That's great. We don't exchange physical money. We make profit from price changes. Correct. Since Forex started and that fixed exchange rate was dropped, then we make profit of price changes. That means those who change prices are these big players, the bank, the corporations, and the government. How? A bank changes euros to yen for an international payment. Then through that, I make money. Damn. Now I see Forex clearly. This gives me a big picture of Forex, which is quite crazy. We don't exchange physical money, we make profit from price changes, okay? Example, you think Euro USD will go up. You buy Euro USD at 1.09. It goes up at 1.1. You close the trade and take profit. I take the profit and go home. You make money from price going up or down, not owning actual euros or dollars. That's great. That's great. That's great. And what a trader does daily. Here's a simple daily routine for a Forex trader. Holy moly. Check the news Is there any economic announcement today? Bro, I can tell you 70% of all traders ignore the news. Like they believe in those technical jargons. Damn. Look at the charts. What's trending? Is USD strong today? Mark levels. Where are support or resistance zones? Okay. Set trades. Maybe press 1 to 3 trades that fit their strategy. Risk management. Always protect account with stop loss. Review results. What worked, what didn't work. Trading journal. That's reviewing. It's not about gambling, it's skill with lose. Okay, so trading is not about gambling. It's a skill which need lose. Do I have lose? Oh, that's crazy, man. That's crazy. Why people get into Forex? Okay, why people get into Forex? Can start with small capital, $50, $100, okay? Trade from anywhere with Wi-Fi. That's my home right here. Big market equals to many opportunities. Oh, wow. Flexible schedule. I like that. But it's not easy. Many beginners lose money by lashing in without a plan. Wow. I wanted to hear that. I, as a beginner, I need to make money, but do I have a plan? I don't have. So emotions like greedy and fear can kill your trades. Trade your plan your trade and trade your plan. Emotions don't fall. It takes time to practice, learn a strategy, and build discipline. I like that. Summary, the story behind Forex. People exchanged gold. People trade currencies online. Then, now. Fixed exchange rates. Currencies now float freely. Only banks traded. Anyone with internet can trade. Long transaction, instant trades on phone apps. I like this. Would you like me to show a little life story of a Forex trader's day or explain how brokers, spreads, and leverage work next? Let me know. I can keep it simple and real. What do you say? Do spreads, brokers, leverage lead to profitability? I don't think so. What I think so is having a trading plan which has been tested out and shows profitability. So by now, as a Forex trader, I'm asking myself, how can I create that plan? Right? So I want to create a trading plan, but how can I create that plan? That's crazy. How can I start trading? Because as I can tell, big players are the ones moving the market. Like these are called institutional traders. Retail, I don't move the market. But as I want to be part of the big players, right? As I said, when you move along with the big players, then you become part of that team. Meaning that if big players are becoming profitable, and so do you, it doesn't matter the size of your capital. I just want to go along with those big players. So let me ask this guy here. How can I be part of the big players so as I can win the trades I take as a little? Because right now, what do I have access? I just have access to the chart. So I just asked, How can I be part of the big prayer so as I can win the trades I take as a leader? The only thing I have access to is the trading view chart. The truth, you don't need a big account to trade smart. Okay, that's crazy. Here's how you can do that with only TradingView. Focus on smart money concepts. Whoa, damn. Institutions leave footprints on the chart. If you can lead them, you can follow the money. Learn to spot liquidity gaps, fake out, breaks of structure, order blocks, damn, fair value gaps, supply and demand zones. Example, price forms equal highs, liquidity above. Price breaks above, traps breakout buyers. Big players sell, price crashes. You win if you sell too. Watch only a few pairs, EU, GU. Institutional money flows in major pairs more than minor or exotic pairs. Stick with pairs like EU, GU, USD, gold, NASDAQ, and US 30 if you are into indices, okay? Use the higher time frames first. Big players trade on 1 hour, 4 hour, daily, weekly. Damn, your small 15-minute scalps will fail if they are against higher time frame direction. Tip, always check the daily and 4-hour trend before going to smaller time frames. Bro, this is crazy. This is crazy. Wait for price to come to you. Institutions wait for break and retest, liquidity sweep, rejection week, strong momentum candle after key zone. Don't chase price. Let it hit your zone, then enter with confirmation. Use clean markups on TradingView. Here's how to use TradingView like a pro. Draw, support and resistance, breakout structure, liquidity zones, equal highs or lows, order blocks, last big candle before move. Okay. Add indicators, optional. Okay. Volume helps you spot daily versus fake moves. Session indicator shows London or New York's opens. News panel to stay aware of announcements. Simple strategy you can follow, smart money style. Here's a basic daily plan using only TradingView. Mark higher time frame structure, 4 hour and 1 hour, and 5 key liquidity levels. Wait for price to break structure, grab liquidity, return to an order block or fair value gap. Enter with confirmation on 15 minutes or 5 minutes. Use 1 to 2 or 1 to 3 risk to reward ratio. Bonus tip, learn from these traders on YouTube. Search damn smart money concepts by Metex, ICT Forex Strategy, Inner Circle Trader, the Forex Channel, the Trading Vault. Damn. So if I want to be part of the institutional traders, I need to learn these smart money concepts. Damn, this is crazy. Step 1, learn smart money concept, trade only top pairs, use our time frame, wait for price to reach your key zone, confirm entry with lower time frame, use stop loss plus LLR. You don't need a fancy broker, signals, or expensive indicators. You just need clarity, patience, and smart execution. Do you want me to show the example of you using TradingView right now? I walk you through it visually. Do that. Do that. Absolutely, like, okay. With my example, EU break and retest. I guess I've seen this already. I don't need that. So after going through every stuff right here, there are things I want to point out. So I want to be part of the institutional traders, like other ones moving the market, right? But I want to be part of that. And I just want to take stuff from here. Like, I just, okay, fake outs. Man, I'm confused right here. At this point, I'm confused. And here's where everybody say, damn, bro, Forex is hard. The goal was to start building something out of nothing. And that's how we started out. But things start to become complicated, even with the AI. Just imagine with the AI stuffs become this turns into complex stuffs. What if we go onto uh, an academy of forex, learning from your gurus and so forth? That would be insane, right? That's what is happening right here. So if I keep asking this question, I'll be confused. And I would say things are turning into difficulty. Here is where people learn. Like, okay, man, Forex is hard. You need to learn one, two, three. You get confused. At this point is where I turned out and say, okay, even the AI wouldn't give that beautiful thing I was looking for to become profitable. How can I make it easy and simpler so that I can become consistent. I can build that consistency and become profitable. So I started to ask like specific questions. For example, I'll start from the I'll start from the basics. Like, how do the big players enter the market in terms of time? Those are just specific questions. It says key times when big players enter the market. London Open, 8 a.m. That's 10 a.m. my time, East African time, and 3 a.m. in New York time. Okay, so big players enter this time and make the market most volatile. So London Open is the most volatile session. Banks in Europe open and institutional orders are processed. Smart money often creates fake outs or liquidity clubs here. But I'm not interested in these concepts, right? Best for catching the initial breakout of fade setups. That means if I keep learning, seeing this word smart money, it needs me to go into learning those stuffs. New York Open, another massive liquidity session. US banks, hedge funds, and Wall Street. Okay, so if I want to be part of these big players, I need to know their time. So I can see their time is London Open and New York Open. That's great, right? So we have also London, New York overlap. That's also great. Pre-London, some institutions start like here. I just need most volatile, massive liquidity session, these two. And according to my time, 10 a.m. is a beautiful time to start trading. So time, I'll be part of these big players during London. And that's great. That's it. That's what I need. It gives me a lot of information, but I just want to be part of them during that time. So how do I build my trading strategy like there? Then I would ask a question. Okay, let's say simple time strategy example. Let's say 10 a.m. East Africa London Open price quickly grabs a previous high with a big candle. Oh, previous high with a big candle. Then it reverses and breaks structure to the downside. This is like a smart money sell setup. You can enter on the pullback to the broken level. But also this looks as break and retest, right? It's the same thing but different words. So using break and retest, I can be part of that move. So that means smart money is just the other packaging of this break and retest strategy. That's quite nice. Would you like me to mark these times and blah, blah, blah? No. So these are sessions, right? London session. So I just want to try one simple strategy from London session. Let me ask a London session strategy. Give me a list of London strategies, okay? London session strategy, liquidity grab and break of structure. time to trade, start watch, blah blah blah, active entry, blah blah blah, step by step strategy. Okay, draw support and resistance zones from the previous Asian session, high and low, usual from 3 a.m. to 10 a.m. East African time. These are those where big players hunt for liquidity. Yeah, I like this. There is no smart money word right there. Liquidity isn't smart money word. So wait for a liquidity grab. What's that? Look for price to fake out above the Asian high or below the Asian low during London Open. Wow. Don't enter immediately. Okay? Wait to see if the move reverses quickly. Weak rejection or engulfing candle. Damn. Then confirm break of structure. After the liquidity grab, wait for price to break structure in the opposite direction. Break minor low after a fake out above. This confirms that the smart money has likely entered. Enter on pullback. Wait for price to pull back to the zone it broke. La 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 la. Okay. Press a limit order or manual entry when price taps that zone. Set, sell, and TP. Take profit 2 times, 3 times risk or next support in the zone. Example, if the Asian range is 1 blah 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 1 blah and fakes out blah blah blah, I guess I understand. Tools needed on TradingView session indicator. Beautiful. Horizontal line tool. Okay. Optional LSI. Now I don't need indicators. Why do I need indicators? Because I need to start the RSI, right? And session, I do understand we have London session according to time. I know how to lead time. Horizontal tool line, that's what I need. That's easy. Mark Asian high, Asian low. I can do that. That's easy. Pro tips, avoid trading inside Asian range. Okay, wait for the breakout and trap. Stick to major pairs like EU or GU for London session. Oh, so I should stick on EU and GU. Beautiful. Focus on one setup per day. Don't overtrade. No problem. Practice this strategy in demo for at least 2 weeks before going live. Okay, that's great. That's great. Okay. Want a trading view visual template of this strategy with a real example? I can create one for you. Do that. Damn, do that for me. Do that for me. Absolutely. Let's walk through a visual example of London session strategy using TradingView, focusing on liquidity grab followed by breakout of structure. Damn, what's breakout of structure? I don't know that. Liquidity grab? I don't know that, but what I know is liquidity is the place where these orders are being pressed. When I grab those liquidity, like grabbing something. Okay, let's see. Step-by-step London session strategy on TradingView. Mark Asian session range, use the 15-minute chart, session time, Asian session typically learn from blah, blah, blah. Action, draw those lines, okay. Wait for the liquidity grab at London open session, London session opens, blah, blah, blah. Action, observe if the price spikes above the Asian high or drops below the Asian low, then quickly reverses. Example at da-da-da-da. These moves indicates as a liquidity grab where big players trigger stop loss and blah, blah, blah. Identify breakout structure after the liquidity grab, blah, blah, blah. Price break below, blah, blah, blah. Enter on pullback, blah, 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 blah. Here's the summary of the strategy. Mark Asian session high and low on the 15-minute chart. Wait for the liquidity grab, confirm, blah, 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 blah. Same thing. So, damn, you have hit the free plan limit. Okay, no problem. So, I guess let's execute this trading plan line here. Let's go into the chart. I have everything. Like I have session indicator. I don't use order blocks. Fair value gaps. I just want to remove that. Let's say gaps. Everybody see those gaps. We have volume profile. I don't want to use that indicator. So what will we have? We'll have session indicator. We shall have gaps, not fair value gaps. I don't know, man, but just call them gaps. To me, feels good. I guess after reading this, I understand what the trade plan is. And this trading plan is what led me to this. Let's execute that trading plan. As they said, a trading plan should be either on EU or GU, right? So let's dive onto those trading plan. That was our whole process. As you can tell, the conversation I had with ChatGPT, we started with what's Forex, and this started to dig deep, but I didn't want to confuse myself, also confusing you guys. So I started asking those specific questions like, how do these pairs enter the market, right? Because me too, I just want to be part of those market. But damn, if I want to be part of that market, how can no part of those I just want to be part of those big prayers. How can I be part of those big prayers? That's where I landed into this Asian strategy. Is it Asian London strategy, right? And it says that we should only focus on major pairs like EU and GU. And to me, man, this is what I want to show you guys. It doesn't matter because my free plan is out, and let's get into the strategy. The strategy is pretty easy as per ChatGPT. The strategy is mark the, let's say this is price action. Let's just delete that. Let's say mark the Asians high. Let's say this is Asians high. Mark the Asians low. Right there. What do we need to see? We need to see price during the Asia is consolidating. Right there. And what do I need to see? I need to see a breakout of that. If it breaks out of that during the London session and just price gets back and reverses back and goes down, that is where you look for your entry. Like there. So this is the strategy what ChatGPT says. But what if we enter early on before this happens? Like once we see this sharp turn, as GPT says, an engulfing candle, like a candle out, which grabs liquidity, and then in, we take our entry, something close to that, taking that entry area and putting that stop loss around there. And let's go on to 2. How about that? What I'm trying here is to demonstrate what I had found so far, the easiest way, like explaining the easiest way, and let's test it out and see if we become profitable. But as we can see, we haven't taken this randomly. We just followed the rules which were outlined by TradingView, like by ChatGPT. That means a lot of people are utilizing this. That's what ChatGPT shows, because this machine was trained on different data, right? So if that data was minor, I don't think if it would have been displayed like here. But I can tell you, millions of people are trading off of this strategy. And us want to be part of that strategy, not trying to bring in volume, but to be part of those big players called institutional traders, as it has been said by this AI. And so far, so good. We want to make money. But knowing the limitation of this is quite good. I just added one thing into this trading plan. The first 2 things actually. The first one is moving ignoring the breakout structure, because I just want to reduce those terminologies actually. So I just want to enter off of something called gap. Where are you, Blue? I just want to enter off of that turn, like a turning point. And what do I need to see? I just need to see a gap into the liquidity, as they say, or resistance, and a gap out. Then I take my entry off of that when the gap has been created. That's one. Means like one, gap in, gap out. Two is I want to know the direction first. So knowing the direction first will help me to take those to reduce the to reduce losses. That's first. Second, it will help me to understand the direction of price throughout the day or throughout the month, and that's what I want to do. I don't want to execute this blindly, right? Because I have some experience with trading and I just want to make it easy to see if this would become a profitable thing. So I want to know the direction first. And I just want to know the direction of the whole month, just anticipating the direction of the whole month. That means within that month, I'll be looking only for shorts. That means looking for sells, or looking for longs. That means I'll be looking for buys only and only. And I'll be looking into month. So we have our entry, and as the strategy says, we need to see liquidity or price land off of these Asians high or lows. Then we take our entry. If I see a gap into that and gap out of that, that means we are turning very quickly. And that is what I want to see. And two additional stuff. Actually, the gap in, gap out for the entry, and I want to know the direction. That means a monthly bars. Ignore the bars, just direction. So let's get started into the charts. Just to do a hindsight or a back test, as they say, if you look onto the ChatGPT like here, find back test. It says stick to one strategy and master it. Back test it, try it on demo account, only go live when you're confident. So today I'll back test it. This month, as I can tell, this month of June, I'll be trying it not on demo. I'll be going live on it. Because if I backtest, I see it gives me the win rate, a reasonable win rate, I'll go live. Because live is where you learn. Let's dive onto that. So let's start, man. I will choose randomly. Okay, for my trading view plan, I want to for my trading view plan, it only gives me around 3 months, like the first 3 months of data of 5 minutes. So I want the 3 months. So first I just want to make this random. I'll be looking onto EU and GU. So let's go onto random generator. And on my generator. So for even number, as I said, I'll be looking for EU and GU. So EU will be for odd number. If I do a random generator and gives me an odd number, then I'll do that on EU. And if it gives me even number, I'll do that on GU. So let's just generate a random number. 1 max to 2. 1, 2, 3, 4, boom. Oh, it gives me 2. So it gives me GU. Beautiful. And as I said, I'm getting the 3 like I can back test on 5 minutes off of 3 months. So it means month 1, 2, 3. So I'll be generating a random number of that just to select a month. Month 1. So month 1 is this one. 1, 2, 3. So month 1 is right there. Let's just use a replay tool and cut off of that. So first, we need to understand the direction to which we are heading, or the price, or we anticipate the next month is price direction. As I can tell, for us to understand the next month's direction, we need to understand something called support and resistance. As ChatGPT says, like here, come on, where are you? We find that support or resistance, like basic understanding of support and resistance. That's it. That's what it's needed. So just draw that line. I'll draw that line actually. Is that support? I don't know, man. I don't know. Okay. Let's say this. Price just bounced off of that. Price went up, failed to close to go below that. That means this is our support line, which is quite nice. But also this isn't our support line, because for a support line it needs to have 1, 2, even 3. So we have 2. So that means this is our support, price is going high. Where is our resistance line? That's our resistance line right there. So this is called fake out. I'm not making up this actually. So this is off of this. You can search here. I can search and say fake out. Like, don't enter the trade yet. Breakouts can be fake outs. And it says also liquidity grabs, fake outs. Smart money often creates fake outs or liquidity grabs here. Create fake outs or grab liquidity. You see, I'm not making up anything. So that's fake out right here. And as we said, we anticipate to continue high because this is a support. Beautiful. So the next month is we're bullish. So if we're bullish, what do I need to see? As we know, this should be Asian high. Asian high. And let's say, come on, sit there and come on. And this should be Asian low, which is quite okay. What do I need to see because I'm bullish? What I need to see is bam, price just plays out like here, like there. And as soon as we go off of Asian session to go into London, I just want to see price doing this. Sweep the Asian low and continues high. So here is where I look for that entry because I'm looking for buys only. And the entry, what I want to see, I just want to see a gap into that, and a gap out. Okay, something close to that. I don't know if it's correct. So I just don't want to wait for those break of structure, blah, blah, blah. Easy. I just want to see price sweep that or takes a Asian low and continues high. For me to enter, I just need to see that gap into that Asian low and gap out of that Asian low. Then I take my entry. Once that gap has already been formed, my stop loss will be onto that onto the low being created actually off of that grabbing of what liquidity, stuff like that, or from that fake out or this fake out low, fake out slow, and targeting 1 to 2 right there. So right now from this strategy, I can tell you guys, I haven't used something that you don't know. First, the Asian high, Asian low, that's easy for anyone can learn from that. Maybe the liquidity grabs, but we know something called fake out. This is a fake out, sometimes called liquidity grabs. So this is a fake out. For fake out, for I to take an entry, I need to see a fake out creating that gap into that low and a gap out of that low. Then I take that entry. Easy peasy. Just gaps. You may call whatever you want. Just easy gaps. This is what I want to see. But where do I want to see this in terms of time frame? For me, actually, I'll be utilizing the 5 minute. That's what I wanna do. So this is our trading strategy, and let's go down 5 minute. Oh wow, 5 minute, beautiful. And for I to know the sessions, I'm using the session indicator by Lax Algo right there. It shows me the session. As you can tell, we have session overlapping right there. This is from like 7 p.m. New York time and ends at 3 a.m. New York time. So let's get started. Just know that I'm looking for those breakouts off of, is it breakouts? Fake outs off of Asian session, and entries be taken around the London session. Not this session. This is called overlapping session. I'll be taking around the London session. London session overlapping with Asia plus itself only, because this is the overlapping of New York session. So let's get started and just test this out. I hope God we make money off this. And let's get started. Pay those bars. That's Sunday. Okay, we have that session right there. What do I want to see? I just want to see the sweep or just a fake out off of this to continue high. Bam, 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 bam. Nice. Where is our London session? Okay, London session has started out. And did we reach this? No, not yet. Let me just use these ones. Nope, not yet. And the London session has started. Boom, we have reached. As I said, I want to see a gap. No gap. Quite interesting. So ignore that. No gap. Okay, let's continue. And we have ignored that. We swept that, but we didn't show any gap. We continue. What? So let's continue. London session done. Okay, we have Asian session right there. Asian session. So we can tell lows are being printed along this box. So when we see London session taking off of this low, then we look for those entry, as I say. Now we are out of this till next day. So let's go to the next day. Asian session. Ha ha ha. Asian session. As you can tell, the low is right here. We need to see that fake out off of that. Nothing. Ignore that. Till next day. Next day, Asian session right there. Wanna see something? Yep. Boom. Okay, we have that gap. Let's see something if it's happening right here. Okay. I'll take it if I see a gap. Correct. So as you can tell, that's boom. This is a fake out and we see a gap right there. Will I take that? I will actually check that. So let's do a buy. And as I say, stop loss on the fake out slow. Take profit 122, 118. I don't know math. This is quite weird. 200, 204. Ah, damn, man. I'll keep it to 236. That's there. So let's spray it out. And boom, got stopped out. That's a loss. Beautiful. As we continue, let me just put that entry right there, just keeping track of this. I'll be back for that. Beautiful. And let's wait for the next day. I know it's quite weird, but let's see. Asian session. London started. London looks like we're not going down. So ignore that. Let's go another day. Yeah, I know it's tiresome, but I need to do this. Why? Because that's what differentiates us from those other traders. So what do I need to see? I just need to see price cause and fix out of that. If I understand the fake outs correct. Dang, I like that. I like that. I just want to see a gap high. So let's see if we get that. Boom, I had that like there. Should have taken it, but I'll take it off that. Off of here and below that fake out and 1 to 2 right there, which is quite okay. I'll buy. Stop loss right there. Take profit right there. Then pay the price. Stopped out. Curious, huh? Nice. As we continue. You'll be like, oh, okay, this doesn't work, man. That's insane. What just happened? I forgot we had this session like here. Like that session low right there. And London session didn't. Okay, to me, that's okay. London session started out, but we didn't sweep during the London session. We didn't take those lows during the London session. To me, that's okay. It's quite boring, but I need to do that. Beautiful. Oh, wow, that was so quick, but we took that, right? We see that gap, and I need to take that, but can I pay that back? Okay, let's just, that was so quick. That shows a gap. This was a gap. My entry would have been right there. My stop loss right there. And 1 to 2. What will I do actually? To me, I'll just take it right there. Stop loss right there. Take profit right there. And remember, we had swept, or we had that fake out. So boom, boom. And let's see how price plays out. And bam. So if we were, if the, like with the what, if we had entered right there, we would have been out around this area. So that's okay. So one win. Nice. If we go into our trading journal, we can see 3 trades, profit trades, 1 trade win, 2 trade loss. Okay, let's continue. This is quite nice. And right now we are on Wednesday, 12th March. Let's continue. New York session. Boom. Asian session. So we want to see that sweep during London session. Are we approaching? Yeah, we're approaching London. London. Show me something, London. Beautiful. London session. When we sweep that, what do I need to see? A gap into the low, a gap into the fake out, and I. Let's see if we get that high gap. Oh, beautiful. Okay, we swept that, but we didn't get that high, right? Still, this is the low. Stop that out. A gap out now. So I'm out of here. Another day. Let's go. So Asian session started. And London session is about to start. Oh, wow. What do we need to see? We need to see here being taken out. Damn, that's beautiful. And I just want to see that gap high. So let me draw that. This is the low of that Asian. To which we had that gap. Want to see a gap out. We didn't have that, so ignore that. Let's go another session. So here's Asian session. Wow, wow. Chill, bro. Chill. So this is the session's low right there. We didn't take it out, so ignore that. And this is 17th March. I want to see the Asian session. Okay, here's the Asian session. I want to see that fake out. Damn, beautiful. We had one like here. A gap that into a gap. I need to see a gap out. I guess the next candle. Give me something. No, it didn't. Yep, it did. Give me that gap. Beautiful. I'll take that. Gap out, gap in, gap out. Take that. Boom. So should I put that right there? Honestly, I wouldn't put it right there. That's a lot, right? So I will cover right here. And as high as possible. 1 to 2. Beautiful. Bye. Stop loss right there. Take profit right there. Pray. And boom, win. Beautiful. As we continue, let's go another day. I know it's quite boring, but we need to do that. Okay, what's sessions low? It's like there. It's like there, but you can see the box how it's strong. Like that's a lot. So sessions low, it was like there, but we didn't have a gap in. It's not a gap. Gap in, gap out. So ignore that until the next day. Start the session. This is the Asian session. Beautiful. London session right there. We just need to fake to learn fake out of that and gap in, gap out. So bam, that's gap out, gap in. I want to see a gap out. Let me draw that. You can tell. And I want to see a gap out. Okay, beautiful. And no gap. Ignore that. Until next day. Right now we are on 20th March. Asian session. Beautiful. Now we are entering the London session. London session started. Asian session low right there. When I see a gap, there is a gap right there. I hope you can see that's the gap right there. Let's see if we get a gap high. Not yet. We got that gap as the strategy says. And top of that, stop loss there, 1 to 2. And buy. Set your SL right there. TP right there. And learn. And bam, hit. Which is quite beautiful. And the next day. And we're in 21st. Asian session has started out. So this is all right here. We want to see price. We want to see a fake out right there during London session. Nah, ignore that. We didn't have that. Until next day. Asian session started out. And we just want to go here and do that gap in, gap out. Boom, beautiful. Right here. Now we want to see gap out. And that's a gap out right there. So entry right there, stop loss right there, take profit 1 to 2. Right there, buy. Stop loss right there, TP right there, line. Stopped out. Let's go. So Asian session started out. What do we want to see? We want to see this being taken out. And London session didn't take that. So wait. Ooh, we took that and a gap. I want to see a gap out. Nah, won't enter off of that. And next day, Asian session. London session started out, but will we reach here? Let us see. Nah, we are out. So the next day, and we're on 27th. Asian session started out. London needs to go off of that. So let's see. No, no, we are out. So this is London session still. We just took that out. I want to see a gap high because we already have a gap into that. Let me draw that to make it clear. Right there. No gap, so ignore that. Another session right here. This is 30th of March. 31st, Monday. Wanna see London session going down. Beautiful. Hey, chill, man. We took that right there. Gap in, gap out. It was right. This a gap. No, it's not a gap. So we wouldn't have taken that, which is quite okay. And I guess the month has ended. And yeah, I guess the month has ended. So 31st Asian session. Let's end the day of this month. Asian session. And session started out beautiful. We took that right there. A gap into that. I want to see a gap out of that. No gap. That's not a gap. So that's a gap. When I see a gap high, show us a gap. Nah, no gap. So ignore that. That's this is the random session being taken out. So and it was on 1st Tuesday, April. Let's check our trading plan, our historical data trading. So we can see that 72%, that's our win rate, like 0.01% of our 100K. Max equity drawdown was around $328, 0.03. Total trades we took, only 6 trades within that month of March, and profitability of those trades is 50-50. 3 trades win, 3 trades loss, and profit factor is 1.2. That's quite nice. Okay, let me just increase that, which is quite nice. So performance wise, net profit 72, gross profit, that's one, longs, okay, shorts, all okay, great. Gross loss, okay, that's nice. 1% is the win of that. Let's say commission paid, none. We ignored commission. So if commissions were there, that means this would be low. And blah 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 blah. That's not a lot. Trades, not a lot. Risk to reward ratio, it was damn, that's a lot of info right there. Not interested. List of trades, as we can tell, 1, 2 losses, 3 losses, 3 wins, which is quite nice. So the other thing is, as we said, we were bullish onto this, right? Onto this month. So we were only looking for those bullish scenarios. And as we can tell, price played out during our bullish scenarios. But there are bearish scenarios to which price just ignored us. Bullish scenarios to which price ignored us. Let's say this was our first entry right there, I guess. Yeah, this was our first entry. As I said, it says that, let me just check something. Master master risk management. That's okay to us. Second, okay, that's first and second, same thing. Okay, one. Let me search for one. Okay, okay, okay. Strategy. Nice. I want to see something like, okay, stick to one strategy. That's what I was doing that month and master it. What I'm trying is to master it. How can I master it? It through learning. That is, keep a trading journal where you took the entry and exit, outcomes, what you will have learned. So let me show you something which is quite nice. Learning from what you're learning from your data, like from your data actually. So if you can see, we had that this we had that's like what do we call this is we had like that's that line right there. We had our gap, we had our gap out, but what did price do? Came back onto our entry. That's crazy, right? Came back onto our stop loss and went high. People will be like, oh shit, stop loss hunted, my stop loss was hunted. No, boy, learn from your data. What can I see here? I see we had this gap, another gap. We took our entry off of that, but price went down. Take our stop loss right there and continued high. We see a gap right there, a gap right there. What if I could consider a second chance? That means if first I don't change my bias, not bias, I don't change my direction as I can tell, because I can see something here being created. And I just don't want to lose that. Okay, something is weird happening on my mouse. Just, this is weird. Okay, this is weird happening to my. Can anyone tell me what's happening right there? Okay, it looks like a control has been tagged on its own. Let me just try something else. Stick right there. You learn something here. This is not nice. My mouse is acting weird. Okay, I don't like what I'm seeing. I can't explain what's happening. Okay, this is weird. I need to Google that. Okay, seems like my mouse's control has been held. Just give me a minute while I'm Googling for the answer. My mouse has, my keyboard control seems has been held. Let's check. Still the same. That's not quite obvious. That's not quite obvious. So it says me to press left shift, control, alt, left shift, control, alt. Damn, that worked. That's beautiful. That's beautiful. So I can tell, okay, price just still went on my direction. This is what people call the what? Stop loss hunt. Okay, that's great. That's great. I've learned something like there. And let's go to another trade. To go into another trade, just need to click that, I guess. Is it? Okay, this was, I need the first one. The first one is right here. Okay, still price went onto my direction. Stopped me out and went into my direction. Okay, that's nice. Second one. What do you see, my people? So second one, same. Like same thing. Asian. Was this Asia? Asia was right there. Asia was right here. We had swept that. Learn off of that. That's a beautiful gap. What I was waiting for was a gap out. Bam. No gap. Price went. Gap out. Beautiful. Then I took an entry. This was off of like here, but I had to take it like there because I press daily pray first. So that means I can just move that right there and stop loss right there. But what happened? Just price did the same thing as the first trade. Like we had that gap, that off of that, stop hunt. Is it stop hunt or stop loss hunt? And boom. What do we see in this version? I see the same thing, gap, entry. What again? Gap right here,